Starbucks stock just announced their Q1 earnings today, and the stock has gone down around 3.6% after the earnings. But looking into the company overall in the past year, it has gone up 8.25%. So like most stocks in the industry right now, everything has been going up a lot, and the stock is no different, where it has gone up around 8%. And then in the past year, it has also gone up around 12%. So we'll look at it from a more of a fundamental analysis to see if this company is a buy or not. Looking into a more historical price to sales for this company to see how the valuation is right now, we can see that in the past 10 years, the company typically is between a 2.8 price to sales to around like 4.5 or even 5.5, which has gone to in 2021. So right now it's at a price to sales of 3.9, which I would say is around the average. So I wouldn't say it's a very cheap stock. It's kind of trading it at the price that it normally is. Going into the highlights of the earnings, we can see that the company had their Q1 earnings per share of 0.75. So this missed estimates by 2 cents. The revenue is up 8% year over year. So it's $8.7 billion right now. The comparable store sales, which is basically the same store sales, has gone up around 5% globally and up 10% in the US. So this is a little bit of a misleading number, and largely you will see that this sales increase is because of inflation and the price of coffee going up. So I'll show you this when we go over the earnings. We can also see that the Starbucks rewards membership, it has gone up 15%. So this is substantial. It's good to see that there's growth in this, because most of the sales that Starbucks gets, like close to almost 50%, comes from rewards members who use the app. So to see that it's going up around 15% over the prior year is good, and it's gone up around 6% sequentially. And also we see that card loads reaches $3.3 billion. So these are people who are loading up their gift cards for rewards. And this is actually ranking as number 2 US brand in holiday gift card activation. So this is pretty substantial. It shows how Starbucks is a strong brand. The company also opened 459 stores. So most of the growth that comes in this company is coming from new stores that are being opened every single quarter. So there's now 36,000 stores globally, and 51% of these are operated by the company and 49% are licensed. So now going into the earnings, the highlights, we can see that the company, the comparable store sales, they increased 5%. So, but a lot of this increase is because of a 7% increase in the price of the ticket. So because of inflation, the coffee prices has gone up. So basically, if you were to look globally, there is a decrease of 2% in transactions. So this is telling you that inflation is having an impact on this company, and there is less transactions going on. In North America, we can see that the same store sales, which is the existing stores having their sales, has increased around 10%, and this is driven by a 9% increase in price. So basically there's only been a 1% increase in transactions, but internationally there has been a huge decrease in the transactions. So it has gone down around 13%, and the transactions has gone down by 12% overall, and there has actually been a decrease of 1% in the average ticket. And in China, the sales has gone down by 29%. So they are having some impact from these lockdowns that are in the first quarter. And this is driven by a 28% decline in the transactions and a 1% decrease in the price of the tickets. So internationally, this company is not looking that strong right now. I will say there is also some currency headwinds that all companies are having, because the US dollar has gone up a lot. But we'll see later down here where it does share that there's only a 3% impact on currency translation. So we'll see that their net revenues has gone up 8% to 8.7 billion, but there's only a 3% impact on this foreign currency translation. So even though the US dollar has gone up, if you were to add 3% more to the sales, there's still a decline of 10%. So there is a huge impact on the international market on Starbucks. And this is really where Starbucks gets a lot of their growth. So it's not very good to see this, but this is something for people to note. And so the company has opened new stores. So they have opened 459 stores. So they now have 36,000 stores globally. And 51% of these are company operated and 49% are licensed. And we can see that US and China comprise of 61% of the company's global revenue. So there's 15,000 stores almost 16,000 in the US and 6,000 stores in China. So there's still a huge growth potential. There can be a lot more stores that are open in China where the company can grow. But we are seeing that right now, at least, the customers in the international markets are struggling a little bit because of the sales going down. We see that the net revenues are up 8%. We also see that the operating margin is 14.4%, so it has declined a little bit. So having these inflationary pressures and lockdowns in China are having an impact on the margins of Starbucks. We also see that the earnings per share, it did go up actually, so they are making a little bit more at 0.74, which went up 7% over the prior year. And then we can also see about the Starbucks Rewards members, where it has increased 15% year over year. So now going into more of the segments, we can see the North America segment, as was mentioned before, the sales has gone up 10%, but really this is because of the 9% increase in the comparable stores sales price. So the ticket has gone up. And really, there's only a 1% increase in transactions for their existing stores. And the store count in the US and North America has gone up around 3%. And the revenues has gone up around 14%. And the operating margin, so all of these things has gone up around 12% here. And then, but from a margin perspective, there has been a decrease as well. And you might know from Starbucks, they are having some issues with unionization. So this could also be a reason why we're seeing the margins decrease a little bit as well. And then in the international segment, the sales has gone down around 13%. The change in transactions has gone down 12%. And the change in ticket prices, they aren't having as much inflation. It's actually been down 1%, but there's still a less sales there. And the store count has gone up 8%. And we see that the revenues have been absolutely destroyed here, where it's gone down 10%, and margins have also decreased substantially around 1.7%. So it's not looking very good so far in the international market. We can also see the channel development segment. So this is anything that is not the retail stores. So when you go to a retailer like Costco, you'll see that Starbucks sells their own coffee beans and drinks. So these are the sales that Starbucks gets from these drinks and coffee beans. So we can see that the revenues here has gone up around 15%, and the margins as well has gone up actually 340 basis points. So this is actually the most profitable part of Starbucks business. They sell these at a huge profit for them. So this is great to see that their margins are going up here, but it is very small part of their revenue. It's only $478 million. Now, looking at the balance sheet, we can see that the company has had a net revenue of $8.7 billion, which is an increase of 8.2% from the previous year. We can also see that the operating income, it has only gone up 6.4%, and that's basically because of all the costs has gone up except for this depreciation and amortization expense. So we are only seeing a 6.4% increase in the operating income. Then after the other expenses, we do get a 7.2% in the net earnings per share. So we are seeing a 0.74 net earnings per share. Now going over the balance sheet, we can see that this company, the current assets and total assets is basically flat here. So there hasn't been too much of a change. The only thing I would say is that this company, they do have more liabilities than assets. So there is actually a deficit for the shareholders, and most of this is because they have a lot of long-term debt. Starbucks is always continuing to open new stores, which is increasing their debt. They have around $13 billion here, as well as their leases as well of $7.6 billion. So usually this number is increasing every single quarter and year because they are continually growing. But I wouldn't worry about this balance sheet too much because Starbucks is a very profitable company. Looking at the company from a technical analysis, we can see that it is right at this top of the channel where there is some overhead resistance at around $110. After the earnings, the company has gone down to 105. So I wouldn't still be a buyer at these levels. It's still on this upward channel, and it can definitely go down to probably $98 where there's some resistance, or even all the way down to $95 or $85. So if you are an investor who's very interested in getting into Starbucks, I would look into buying around $98 or or at the bottom of the channel at 93, or I would really, for me personally, I wouldn't buy the stock until it gets to $85. So especially because of the challenges that they're still having in the international markets and the potential recession, I wouldn't want to buy this company until $84. So that's been my analysis of this company so far. If you like the video and subscribe for more videos in the future. Thank you.